Здравейте! Аз съм Пламен Андонов, а това е българският криптоканал.
And we are live. So, hi there to everyone who's watching live right now. Today is 25th of November. The time is 4 o'clock p.m. and I see already that there is like 10-15 people who said hi in the chat. Hi to everybody. And with us we have Greg Foss, which is arguably the guest that I'm most excited to have here, because honestly we had a small chat just before we started. I wanted to give us like a small backstory of myself, like where I'm from, what I do for living, and how my personal journey into crypto, into Bitcoin and so on. And I just wanted to give like a perspective, because where I am, like Bulgarian dude, 32 years old in Bulgaria, and where Greg is in Canada, I would imagine you're at the moment there doing some completely different things for living, completely different like knowledge and set of skills and so on. We're so disconnected, like so disconnected physically from, you know, like across the globe and from knowledge and so on. But what connects us is Bitcoin. So I would like for us to, you know, like focus on this and talk about like how two people from completely different cultures have common issues at hand, and most probably they are like not just issues of Bulgaria and Canada, but they are like of the whole world, of the whole globe. And what is the connection between these issues and Bitcoin? Because there is something that I constantly say to everyone new in crypto: you must understand what problem does Bitcoin solve. If you don't understand what problem does it solve, you're just a speculator, you're just a gambler, you're investing money in something just because it's going up, and you're doing it without any understanding of the matter. So without further ado, Greg Foss, please introduce yourself to the audience with who you are, where are you from, what do you do for a living, and how did you come by to find about Bitcoin?
So, well, firstly, thanks very much for having me. It's awesome to and say your name for me once again so I don't butcher it. Płamen, thank you for having me, Płamen, and I'm honored to be on your channel. Yeah, I'm from Canada. I'm 58 years old. You shared with me your age, so I have you by you know, almost twice your life, which doesn't mean there's any difference in why are we joined at the hip. It's a common movement to help the world escape the fiat Ponzi. Okay, fiat money or paper money is the cause of so much hardship in the world. It is a crime to the less privileged. It causes debt spirals, DEBT spirals. I've spent my entire career in the financial markets, and I'll get to that in a second. But what I want to applaud you for is your desire to educate, and that is what joins us as well. I've sat in a chair, a risk management chair, for over 30 years, essentially trading risk from a credit perspective, which means I start my analysis of every single investment with through a credit lens. I was a high yield junk bond trader for 30 years. Junk bonds, as you know, that's a bit of a pejorative, because if the bonds are junk, if the company has publicly traded equity, then the equity is super junk. And it's not to say that you can't make money in the super junk equity, but chances are you're taking more risk for less return. Some classic examples of super junk equity that have caught the world by storm lately are AMC, so AMC Theaters and GameStop, two equities that were pounded down in price because the bonds, the prior ranking bonds, or the senior claim of the bonds, were trading at distressed prices. So in the case of AMC, did you know that the bonds hit 1 cent on the dollar?
I know.
And you could have made 100 times your money in the bonds before the equity was worth anything more than zero. yet everyone got into the equity and there was a short squeeze. But let's not talk about that. Let's focus on what joins us.
Yeah, Greg, sorry,
yes.
Just a second. I wanted to say, I know that the bonds hit the 1 cent to the dollar because I spent past 48 hours just watching your podcast. So now I know. Before that, I didn't know. I didn't know at all.
You always have to look at the debt of a enterprise before you consider investing in the equity. Again, in Finance 101 and in capitalism, the debt has the prior claim on the assets. If the debt's not worth 100 cents on the dollar in the event of a restructuring or bankruptcy, the equity has zero claim. That's not to say that. This
is a topic that I would like for us to deep dive into. I have a question about that. Just
sure,
going over exactly.
Keep it high level here.
Yes.
The biggest problem that joins us, and what does Bitcoin solve? Mm-hmm. It solves the sound money conundrum. Okay, in 1971, the U.S. dollar was backed by gold, and then Nixon decided unilaterally, okay, the gold backing, we're withdrawing it, and it was effectively a default. The United States government defaulted on a contractual obligation to the world in 1971. And since then, paper dollars have been backed by nothing but the full faith and trust in the various governments. Now, what does that mean? It means you have to trust the central bankers not to debase the currency. You have to trust the central bankers not to engage in shenanigans, which cost you money in the long term, debase the value of your purchasing power, bring on inflation, and most importantly, Kwame, it disadvantages the people at the lower end of the privilege spectrum, because people at the high end of the privilege spectrum own assets that will maintain their value in the face of a currency debasement. Those types of assets are real estate, gold, other hard assets, silver, fine art, but those are luxuries of the privileged, right? And at the bottom of the spectrum, you have people that generally live paycheck to paycheck. They might keep their savings in fiat dollars in the bank. Yeah. And it's very important to understand, everyone thinks they're making so much money on real estate these days, but they're not.
Yeah.
The value of your house is not increasing in price, in utility. Your house is being measured in a debasing currency, which takes more dollars to buy the same house and the same utility. And this is what people don't understand. Oh, I'm making a ton of money on my house. I'm just that it takes more units of account to buy the same house. Okay. And over the last 100 years, the US dollar has lost 93% of its purchasing power. It will continue. It's mathematically certain that it will continue. And that's what Bitcoin does. It is the best hard asset ever created by man. It has defined scarcity. It has portability, transferability, divisibility, verifiability, all of the things that make sound money attractive. Bitcoin, quite simply, is the best technological invention man has ever brought forth to store the value of your time and energy so that you can pass it along to your children, or you can transfer it somewhere else in the world and it will settle in 10 minutes. It's a beautiful technological innovation. And it is, in my opinion, and I don't want haters from the crypto world, the only blockchain that truly matters, the only truly decentralized blockchain. Other platforms built on various other blockchains are not nearly as decentralized. They have potential to rug pull on their protocol, but let's just focus on Bitcoin. Okay, Bitcoin was the first blockchain and the most important blockchain secured by the world's most powerful computer network, decentralized all over the world, including in Bulgaria, where you have nodes and miners. And that's what binds us. Canada, Bulgaria, you guys are 6 million people, we're 30 million people. you know what the problem is? Neither of our countries really matter, okay? Like, both of our countries are rounding errors, but both of us want what's better for the entire world of unbanked citizens, people that now have an iPhone that can get services on their iPhone that they're not able to get from local bank or financial institutions. You can transfer money anywhere in the world. It's so beautiful. I've sent money to New Zealand. If I had tried to do that same transaction through the international banking system and through the SWIFT network, it never would have arrived. Okay, I donated money to a New Zealand indigenous tribe, and it was like $750 and it settled in 10 minutes. If I had tried to do that same transaction through the international banking system, it never would have settled. And this is the technology that allows us to view the future. So happy to be here. I look forward to your questions, and we can talk whatever you want. I sort of have a hard stop in about 2 hours, 2 hours and 10 minutes, if you're cool with that. And otherwise, I'm your guest, and you ask away. Okay.
Awesome. Thank you very much. I've written two notes that I want to share with you. One is just again, in order to like get the perspective of Bulgaria. And I remember the cultural shock that I had when I went to London, UK to live and work there. It wasn't about the language. Like, you know, I've spoken already the language. Like now, like it's not perfect, but it's good enough.
It's back then, good.
Yeah, back then it was a bit worse, but again, it was good enough. However, though, what really hit me was like how every Monday, everyone was asking me, you know, like, what did you do over the weekend? And I was like, well, I haven't done anything. Like, what do you expect me to do? And at the same time, everyone else was like, oh, I went to Paris. Oh, I went to that. Oh, I did this. Oh, I did that sport. Oh, I did this. I was like, it is so different, because in Bulgaria, when someone takes a paid leave from the company he works for, he usually does repair work to his kitchen or to his bathroom. Because there you needed to change the tiles, and in order not to pay a handyman to do it, exactly, you do it, right? Because he's gonna want money, and you don't want to spend it. You don't have the money, so you just do it yourself, right? Or you ask the neighbor to do it because you know he's better, and then you do something for him, right? Like that's the reality of Bulgaria. Like you get it, the level of wealth that Bulgaria is at, right? I'm not saying, and again though, these are memories from let's say 10-15 years ago. Maybe today it's a bit better. And especially in the capital, because in my opinion there is a big difference between in the capital the amount of capital in the capital, meaning money that falls in from other countries, compared to let's say the smaller towns. Because if a foreign country wants to open an office in Bulgaria and paid good wages, let's say absolutely random numbers, let's say in Germany it's gonna cost you a certain specialist 5,000 euros. If you can get him for 3,000 in Bulgaria, you know that's arbitrage for the same work that you can get done. And my point is that therefore the salaries in the capital are much higher, and therefore the quality of life, the standard of living in the capital are much higher. So that being said, because you're in Canada, I bought a Mustang this year in January. So I had to, and the thing is, I was thinking, where should I buy it from? Like I checked the price of a new Mustang.
Sorry, a Mustang, a car?
Yeah, a Mustang,
nice.
A car. Yeah, okay. Yeah. So I checked the price of a new Mustang. I'm not gonna share the price. I'm gonna for a second. I'm gonna because I have a very important point to make about the price of the cars. So I went to Ford.bg, like the Bulgarian site of the Ford company, and I checked the price of the Mustang, and I was like, okay. Then I went to the second-hand market, the site, right? And I checked there the price of the cars, and then I was like, okay, let's look if I want to import it from Europe, let's say from Germany or whatever. And after that I was like, okay, let's say people said it's better to import from the States or from Canada. So I started looking into that, and at the end I bought a second-hand Mustang for 34,000 Canadian dollars.
Okay.
From
what
Canada.
What year was it?
2019, quite new.
Oh, so it's not the old Mustang.
Oh, no, it's a new Mustang. It's a new Mustang. Yeah.
Okay.
So 2019. No, not the classic ones. No.
All right.
No. So it cost me 34,000 Canadian dollars. With the imports and everything, I guess it went up to 40, something like that. But my point is the following. A new Mustang, like the one that I bought, it had just 2,000 kilometers, let's like 1,500 miles, 1,000 miles, I'm not sure, on it, right? So
it's just over 1,000, over 1,000 miles.
So for 2,000 kilometers, I bought it at the end of 2020, at the beginning of 2021, so it was just like a 1-year-old car. And a brand new one was costing, the same car was costing like 42,000, something like that. I calculated that I'm saving 7,000 by buying it second hand. Firstly. Secondly, though, I couldn't buy it new one because in Canada, you have these laws that a new car cannot be exported unless it was created like, not created, but what's the word? Assembled, yeah. At least 6 months ago, assembled and installed, I guess, for the first buyer, at least 6 months ago, or it has at least 10,000 kilometers or 20,000, can't remember what was the number. And this car was over a year old and it was 2,000 kilometers, so I could buy it and, ship it back to Bulgaria. Okay. And this car, at the end, when it came here to Bulgaria, it cost me 60,000 of my local currency. 60,000 of my local currency, which is like 30,000 euros, which is again around 40,000 Canadian dollars.
40,000,
yeah. And a brand new car like that in Bulgaria costs 70,000 euros. Over
euros? 70,000 euros?
Yep. Oh, so that's like 90,000 Canadian dollars. Brand new one in Bulgaria. So it's over double the price. And here is the thing. Like Bulgaria, like we're not Singapore. We're not, like a rich country. And at the same time, like the supply chain back then wasn't that hit by the whole situation. So why does things, like cost so much more? Like talk also, let's say, it's not just cars. There's a bunch of other things that cost so much more here in Bulgaria. So again, in Bulgaria, what I'm trying to convey here as a point is that the salaries, the income is not high. A lot of things cost even more than you would expect. And things like, let's say, for instance, gasoline, again, is double the price it is in US.
Wow.
Yeah, it's quite crazy.
Okay, so I'll answer a couple of questions. Firstly, one of the things about Ford is that the Mustang is actually assembled very close to the town I live in. Okay, so you can just imagine the economies of scale of having a Canadian assembly plant, because the Auto Pact, which is an agreement between U.S. and Canada, ensures that Canada will have a certain number of assembly plants and manufacturing plants in Canada of the big three. The big three are General Motors, Ford, and Chrysler, right? So these are very important components of our industry in Canada, our manufacturing industry. And, they produce a lot of these cars. So obviously you'd think that closer to home, you have the economies of scale, and that's why a car in Canada, a Ford Mustang in particular, if it would be interesting if you did the same exercise. We won't do it on the show here, but do the same exercise for a Lamborghini, for example, in Italy, which is produced in Italy, which is a lot closer to Bulgaria. I just looked at a map to find exactly where Bulgaria is, and I want to give a shout out to you guys, hardworking Eastern Europeans. That like guys from Croatia, you talk about the hardest working people in Canada right now, or for a long time, have been like the Croatians, the Romanians, the Bulgarians. I don't really know if there's a big Bulgarian community, but certainly in Canada, the Croatian community is off the charts, present and hardworking. And, just across the sea from the Adriatic Sea from Italy, and then the same thing, we have a huge Italian community in Canada that's very, very hardworking. Italy is a beautiful country. Have not been to Bulgaria, but just the point is, Canada is very lucky to have a lot of, we're a very young country, couple of 100 years old compared to you guys, thousands and thousands of years old. Point is this: we have some economic advantages from a manufacturing perspective of North American cars. Everything comes out in the wash. I think that if there was a Lamborghini or an Aston Martin or some Eurocentric Mercedes-Benz to an extent, although we have a lot of Mercedes-Benz manufacturing in North America, this is what makes global supply chains, right? One is basically the being able to have a local plant that uses local labor, that uses local parts and machinery to manufacture the Ford Mustang. I'd be interested to see the study again, and pull out a car. What was one of the cars that was a bit of a funny one for a while? It was was it called a Lada? Do you remember that one? It was a Russian car, the Lada. It started coming over to Canada. It came over to Canada for a while, but it didn't last long. It was it wasn't quite as robust as some of the North American cars. But
just 20 years ago, it was the most driven car. Yeah. It was the most driven car in Bulgaria. Just 20 years.
Well, then is it okay? The Lada. So it came a little. The Volkswagen was big in Canada. The Volkswagen Beetle.
Yeah.
I did not have any manufacturing over here when it first. All of them were imported. But the Lada, yeah, that was a classic, little bit of a history lesson there.
Yeah.
But, let's get back on, back on track. But here's what makes the economy work. The funny thing is that you were doing the math in your head.
Yeah.
You were saying, okay, this many euros is this many Canadian dollars and this many, what other, you said Bulgarian. I don't even know what the name of your, lira as well?
Leva.
Oh, leva. Okay, leva. And so, look, I mean, all of the things that go on, one of the things that's really a farce about the whole fiat Ponzi scheme, and I will call it a fiat Ponzi, and I'll tell you why it's a Ponzi when we get into it. But right now, this whole thing about, US dollar is the strongest fiat in the world at times, and the DXY, look, they're all going to zero, okay? It's just a race to the bottom, and some will go faster to the bottom and others will go slower. The US dollar will be the last fiat currency to fail, but ultimately it will fail as well. Prior to that, though, our countries, yours as well as Canada, will fail far before the US dollar fails. And that's a very sad legacy for our children, and something that I'm trying to help educate the world is in ways to avoid losing all your wealth, like people in Argentina have done 4 times since I've been alive. 4 times. I met a young lady in Florida last week, or 2 weeks ago now, from Argentina, whose parents lost everything twice. Okay. I mean, that's a horrible situation, and this is what we're trying to avoid. And that's what binds us to a sound money principle with no foreign exchange. One Mustang measured in Bitcoin is one Mustang measured in Bitcoin anywhere in the world, and that's the beautiful thing.
Yeah, listen, let me kick Bitcoin things off with telling you from my perspective what problems does Bitcoin solve, okay? And you're gonna add to it or tell me if you disagree with any of those.
Okay.
So again, just through my life, I felt like there is a lot of corruption in Bulgaria, in the government.
Yes.
There is a lot of these, it's called government, how's it called, orders or something, when let's say you need to build a road and you have to choose a company who's going to do it.
Okay, yeah.
And then they choose like the worst company possible that does it for 5 million, out of which they subcontract someone else for 2.5 million. And then there it is, like 2.5 million already went to the pocket of someone that didn't do any job. And then that 2.5 gets subcontracted again and again and again.
Right.
And at the end, something that costs $500,000 gets sold for 5 million. And the thing is, all of this money came out of my pocket because I'm the taxpayer. So I feel like there is a lot of lack of responsibility about all of this corruption. On the topic of how and why does Bitcoin solve it, it's a different topic. I'm saying that, in my opinion, Bitcoin will solve this problem, the problem of corruption. Then though, especially after 2020 started, what happened in US, they started printing literally trillions of dollars. And this is something that in my streams, I'm trying to convey because it's astronomical number. It's just hard to understand how big of a number $1 trillion is.
Yes.
And just the latest infrastructure bill that was for 3 trillion, I did the exercise, and the math that we came to was that it equals that the city that I'm from, Varna, the whole population there, which is 350,000 people, they have to work under slavery for 1,000 years, and all their income, all their money, everything, all the value that they produce, it has to be kept and paid off for that $3 trillion to be generated. So it's 1,000 years of slavery for a city. This is how much money it is, because it's just hard. It's $1 trillion, like, I don't know, like, it's $1 trillion, like, it's just hard to convey the value because you've never spent $1 trillion yourself. And I would argue that it's even hard for a human being to spend $1 trillion, and this is why it's just hard to get the value, like, how much value is that? So, and then I started realizing that it's not just about the lack of responsibility about spending my money, because when I pay my taxes, I convey the responsibility to someone else to spend them in the smartest way possible, but also they're messing me up with all of this printing of money. And then I remember even like 2018, 2019, during the bear market, when I was talking to my friends about Bitcoin, I was saying, I care more about what is happening today in US than I care about what's happening today in Bulgaria. And here is why. I said, like, what happens today in US has larger impact to the future of Bulgaria in 5 years, in 10 years, than what's happening here in the political scene or whatever here in Bulgaria. And just recently we had a podcast with how do I put it, like economist person who explained to us why when the Fed starts printing, ECB in Europe starts printing as well. So why pretty much US is pulling the strings of all other central banks across the globe. It's not like when they start printing, they go into hyperinflation and we are fine in Europe and so on. It just doesn't work like that. And again, it even more solidified my belief and understanding and perspective that what happens in US pretty much affects me very much. Yes. So to me, Bitcoin is going to solve this. And then you started talking about the efficiency of Bitcoin, how you transfer value, how you transfer money from one country to another country. If it's on the main blockchain in 10 minutes, if it's in Lightning Network, it's instant. And the thing is that the cost of the transaction, how much is it going to cost you to transfer it, is determined by the market. Like there isn't a monopoly, like the same way there is with Western Union, with MoneyGram and so on. Because when you have all of these miners and they're competing with each other for the cheapest electricity, for the best, first to get their hands on the best hardware, and then you have the manufacturers of the chips and so on, and they're competing with each other, you have the free market working for you, for me. This is why I like competition, because if I can buy, let's say a Mustang there for 30,000, maybe someone else can make it 25,000. So literally, they're hard working for me. So I'm the customer, I'm like, I'm so happy. And I feel like there is too much monopoly, too much corruption in the legacy financial system, in everything. Like again, my perspective, going to London, I was blown away that every single ATM is free. Every single. So let's say I'm with Lloyds Bank and I go to National West and I can withdraw money from there. I'm like, this doesn't make any sense, because in Bulgaria, it costs you, let's say, close to $1 to take your money off the ATM. So if I want $20 bill, it costs me $1 just to take my money. And if I go to a competitor's bank ATM, it's even more expensive. And I'm like, and I go there and it's free. On my online banking, again, I'm paying so many fees. I'm checking it from time, so many fees for transfers. In London, in UK, everything was free. Every single transfer between the banks are free. Every single ATM withdrawal is free. So again, from my perspective as Bulgarian in Bulgaria, I'm like, this is so inefficient. These are dinosaurs. These people do not deserve my capital with them. I'm gonna bank with UK, but I'm not gonna bank with these because they don't deserve me as a customer. They are not competitive. And one thing that I would like to say about Bitcoin is that it gives me, I have trouble saying this word in English, how's it called? Sovereignty, something.
Sovereignty, yeah.
Sovereignty.
Yeah,
Which means that, to me, in my head, the way I see Bitcoin and sovereignty is the following way. Only I know how many Bitcoin I have. Only I know in which addresses they are. And if I want to, I can keep the seed phrases secret, and I can give this one to, let's say, one kid, this one to, let's say, my grandkid, and this one I say for, let's say, my other half after I pass away, and so on. And I'm independent of anyone else. And I constantly say, especially in the last month in my streams, I constantly repeat the following thing. We were 500 years under slavery. The thing is, we are still under slavery, we just don't realize it. We just have different rulers now. Because your money in the bank are not yours. And this is why I started the whole story about the Mustang. When I was transferring money to Canada, it cost me, and I kid you not, it cost me about $500 Canadian to to buy a 3,400 Canadian dollars car. It cost me $500 for the fees.
Yeah.
And I was like, this is insane. Like with Bitcoin, especially right now, when one Satoshi per byte transactions go through, it would have cost me for sure less than $1, possibly less than 50 cents. This is literally insanity. The legacy system must go. It's inefficient.
I agree.
Some people say that some people are gonna lose jobs when some new technology comes. Like, so what? We have to keep zombie companies. We have to keep zombie boys at at their current jobs just so people don't suffer from having to learn a new skill and changing their position.
Wow. Yeah. I mean, I couldn't say it any better. And it comes from, I'm not going to say that Bulgaria is a lesser developed country than Canada, but it sounds like it is. And here's a couple of things I'll add to your very good explanation of why Bitcoin matters. First of all, fiat money is slave money. Okay. There's no other way to describe it. You are a slave to the inflation and the debasing of the fiat currency that they program into the printing of fiat money. Again, you say that Bitcoin is programmed, it's math and code, but fiat is also programmed. Fiat is programmed to debase. It's programmed to cause inflation because inflation ensures that the collateral values of assets that you secure loans with increase in value so that the banking system itself can lend money against a collateralized asset and the value of that asset will increase. It's programmed in the capitalist banking system, a fiat debasement. So fiat is slave money and Bitcoin is freedom money, freedom for you to allocate your capital as you choose. And you pointed out, but here's a neat thing too that we haven't brought up. And in Canada, I didn't realize. So I'm a partner in 8 Irish pubs in Montreal. That's not my hometown. I'm currently in Toronto, but Montreal about 500 kilometers away, 300 miles. My hometown, Montreal, I'm a partner in 8 Irish pubs, and we're pretty good operators, okay? We have profit margins or EBITDA margins of about 14% on every sale, which means for every dollar we sell, after all fees and everything are paid, we make a cash flow of 14 cents. But now if someone decides they're going to pay that bill with Visa, Visa takes 2.5% as merchant fees in Canada. So our profit margin goes from 14 cents down to 11.5 cents, right? Just because they're paying with a Visa. Well, if they paid with Bitcoin, there'd be microscopic fee, and our profit margin would be maintained at 14%. Do you know in El Salvador what the merchant fees charged by Visa and MasterCard are? And I'm certain in Bulgaria, the merchant fees are probably equally as high. They are 7 and 8% on sales in El Salvador, which imagine you have a good restaurant operator in El Salvador, and restaurants are a competitive business, and globally it's a very tough business. So if their profit margins were 14% and someone pays with a credit card in El Salvador, their profit margins gets halved. They go down to 7%. That's assuming they were a very good operator. What if they were a mediocre operator and only had 5% EBITDA margins, and somebody turns around and pays with a credit card, and all of a sudden, all that work they've done gets stolen by the credit card company because the payment rails are so inefficient. And this is what Bitcoin solves as well. The Bitcoin payment rails are a thing of beauty. You can settle transactions on the Bitcoin payment rails in dollars. You don't even need to settle them in Bitcoin. So all of these things are going to disintermediate the financial institutions that you pointed out in Bulgaria were inefficient compared to London. But I'll just tell you that anywhere in the world, the financial institutions are inefficient compared to Bitcoin. And they are in for a time of reckoning. Western Union is absolutely baked, okay? It's a company that's worth about $6 billion in market cap. and it's on its way to zero. If you want a good short trade and you're a hedge fund manager, you know, you take a core short position in Western Union, because they are not going to be able to get out of their own way. Remittances that charge upwards of 20% sometimes. Once you know, it's for smaller transactions, but you could pay 20%. You send $100 from country A to country B, and by the time they get it after foreign exchange in country B, that $100 is now $80, and that's egregious. And that's how Western Union makes their money, and that will not suffice going forward when you have the alternative of making that same payment wallet to wallet in Bitcoin, rather than Western Union to Western Union, where someone may have to get on a bus and go all the way to Western Union. And by the way, gangs of thugs hang out at the Western Union offices because they know anyone who just went to the Western Union is either carrying money when they're trying to send money, or they already just received money and they're leaving the Western Union local branch in their home country. So look, so many reasons to embrace the Bitcoin network. Most importantly, though, it's not, you know, it disintermediates the inefficient fees that are in the legacy banking system, whether it's interbank fees, or sorry, Interact fees, or you mentioned the ATM fees, whether it's Visa fees, merchant fees, all sorts of different fees. Everything in banking is fees. Try and do a foreign exchange transaction on your bank. And if you're trying to do some, I just experienced this recently. I'm doing a transaction where I'm buying a property in the United States. I think my bank is mining my foreign exchange transactions and jacking up the fees every time I check what the exchange rate is when I try and hit the, you know, I want to transfer this money. They know that I'm going to be a buyer of US dollars and a seller of Canadian dollars, and the fee they're giving me is captive. It's not like I can go around and shop around to the other banks around. I'm captive to their system. And, you know, bid to offer, there's about a 2%. You know, you buy at 127 and you sell at 129, or the reverse. You buy at 129 and you sell at 127, and the bank makes that 2%. Well, that's a huge transaction fee on foreign exchange that trades very, very tight market. But when it's shown to you as a consumer, they rip your eyes out. They're absolutely ripping your eyes out. So on a 500, you know, on a large transaction, you can be paying thousands and thousands of dollars in foreign exchange fees, and you're captive to that bank. Whereas if I could just send Bitcoin from Canada to the US, one Bitcoin is one Bitcoin. I pay for my property in the US in Bitcoin. I don't get my eyes gouged out on the foreign exchange transaction.
So we just went through what problems does Bitcoin solve for everybody, regardless where you are from. I would like to pivot a bit the conversation to our southern neighbor, Turkey, which their lira currency almost hit 13 per $1 the other day, and now it went down a bit, so now it's like 11.5 or something. And again, a quick personal story. Just a few months ago, they called me from the bank that 25 years ago I opened a bank account with them, and I was like, firstly, I don't bank with you. Secondly, 27 years ago, I was 5 years old, so for sure I didn't open a bank account with you. And they were like, okay, well, maybe you didn't, but someone else did. And I asked my family around, and apparently my grandfather did open a savings account with me. The money that he put in was worth half a flat, like, you know, like a real estate flat, half the value of that at the time with our currency. And he put the money in with the idea most probably that when I grow up, when I turn 18 or whatever, with all the interest rate, it must be enough for a whole flat. Okay. So 27 years later, at 32 years old, I get the call from the bank and they call me for that account. And here is why because they're stopping the checking the goat savings accounts and they're converting them to standard accounts, and therefore they have to charge me a fee. And because they will start depleting the debit, they must call me to inform me that I might be negative at some point, and I owe them money. So this is why they have to inform me. And what happens is, I'm like, okay, so how much money are you talking about? I'm ready. Wombo. Here is the Wombo. Like, Bitcoin didn't get me the Wombo, but my grandfather for sure will. What happens is, what was left in this account was 34 leva, which is 16 euro, which is pretty much a night out, one dinner with salad and a main dish. That's it. After 27 years of interest rate.
Yeah,
and here is why. Because in 96-97, Bulgaria went through hyperinflation. I was too young to understand why. I was too young to understand what exactly is it happening, but I remember us removing the 3 zeros from the money. So 10,000 leva become 10 leva, 20,000 leva become 2 leva.
That's not even funny. It's not even funny.
And my father, and here I got really angry at that time. Now I'm over it kinda, but I was like, so my grandfather was saving and saving and saving. Who could have done with this money whatever he wanted, travel the world, like just not work for a bunch of years, like whatever he wanted. And instead of that, he was like, okay, you know what? I love my grandchild. I want to live here. I want to give him a good start. I'm just going to save this money, put it in the bank account. And then what happens is I literally got screwed over. And here is the question. Who is going to bear the responsibility? No one. No one went to jail. No one's going to pay me what I'm owed. No one's going to pay my grandfather. That's it. It's just, it's stolen value without any law protecting me. That being said, sorry,
No, I feel horrible, but yes, that's what Bitcoin solves. You can, you know, I have 3 children. I have some Bitcoin put away for each of my children. It's the value of my time and energy that I have spent at time 0 that I am confident will be worth more in the future, stored in the Bitcoin ecosystem, because that's what Bitcoin is. It stores the value of your time and energy for transfer across time and space, for transfer to your children. So I have this story that, you know, when I was a young man, 35 years ago, even more, 38 years ago, one of my summer jobs was repairing asphalt shingles on a roof, right? Like doing, and on a really hot summer day, I would have made maybe $40. Okay, so 8 hours of work at $5 an hour, and that $40 was pretty good money back in, you know, in the 2000 and what would that have been? Not even, it would have been 1984, let's say, when I was working at on these roofs, 1982 to 1984, and that $40 that I earned back then improved the value of that house by more than $40, okay, because that's what's supposed to happen. My work and energy and time went into improving the value of the house. So I got $80. And given that since 35 years ago, I've continued to earn money so that $40 I've never really consumed. Think of it as being there from 35 years ago, and it still sits in my bank account. The problem is, what is that $40 worth today? I promise you it might be worth $6.50. And that's what I have for 8 hours of work, is $6.50 of purchasing power. It's just ridiculous, right? And that's what fiat does. It robs you of your time and work energy that you have put into a project. And that's what Bitcoin solves, because when I transfer value to my children, my work energy will be preserved for use in the future, for them either to consume or pass on to their children, right? And that's what Bitcoin, I'm an engineer, and that's what appeals to me so much, is the law of conservation of energy. Bitcoin is digital energy, and the law of conservation of energy is the first law of thermodynamics. And I want to be able to conserve my energy, transfer it to my children, so the value of that energy is maintained and they can use it in the future at the same energy value It just will be worth a whole lot more in fiat dollars in the future. But one Bitcoin is always going to be one Bitcoin. It's just a question of how much that Bitcoin purchases in the future. And in my opinion, it'll be a heck of a lot more than your granddad putting money into his fiat banking account, right? My price target on Bitcoin in today's dollars is over $2 million a Bitcoin. That's where Bitcoin should be trading, in my opinion, today. And it's not. And we'll get to how I get to that price. Quite easy. But think of that you have a chance to purchase digital energy today at a price that's exceedingly cheap relative to its true value. And you'll be able to transfer it to your children.
Turkey. Can you please tell me what is your view? Like when I say Turkey and we know what's the current situation, what are the first things that pop up in your mind? Like why is it happening? What exactly is it happening and where is it gonna go?
Well, listen, I see where Turkey is on the map compared to your country, and I'm sad what's happening. But unfortunately, it's over for Turkey, okay? And I've traded credit long enough to know that there's no solution. It is in a spiral downwards that is not 100% certain to explode, but highly likely to explode. Some of the responses by the government, by Erdogan or however you say is, have been mistaken policies. There's no question. Why is it happening? Probably the reasons it happens in other countries, other G20s. So Turkey is a G20 country. What that means is it's one of the 20th largest economies in the world. That's very dangerous because you can't have too many G20 countries like Argentina, like Turkey, that fail before there's a contagion and it starts impacting the G10 and then the G5. Okay. Now Canada is a G7 country, although we are very lucky to be there, and it's all because we are just, we have the relationship with the United States, the world's largest economy. But the truth is that contagion in these markets will cause dominoes to fall. And one of the things that's happening in Turkey, it's unfortunate, but we've seen it happen in other nations. They will have to basically solve their debt spiral by printing so much money, monetizing the debt. You'll take a few zeros off of their Turkish lira, and they'll reestablish an exchange rate that costs their citizenship lifetimes of savings, potentially, much like it happened in Bulgaria, where they took 3 zeros off your and so this is it happens on a regular basis. You could see this happening in the credit default swap market. That's CDS. You can see when countries start falling out of favor, where insurance to hedge against the failure of that country starts costing more and more. It's measured in a rate called the credit default swap rate. These are the same rates that foretold the collapse of Lehman Brothers, that foretold the collapse of the American financial system in 2008. Now it's happening with countries, okay? So is Turkey the Lehman Brothers of the countries? Not a Lehman Brothers. It's probably more like a, it's a small brokerage house that the rest of the world's not going to, unfortunately, care that much. Like, it's just mathematics of the relative. But imagine if a G7 country gets into trouble, and Canada is well on its way. Okay, so Canada is a G7 country whose debt and debt insurance costs are foretelling an increased risk of Canada following the path of Turkey. Why does it happen? Because you have poor management. You could have some corruption. I'm not saying there's that much corruption in Canada, but I'm certainly saying there's some poor fiscal management taking place in Canada. Our Prime Minister recently said, for example, that the budget will balance itself. And he also said that he doesn't care about monetary policy. That's very dangerous coming from the manager or the CEO of our country, right? So debt has reached a level that it's unsustainable, and it's absolutely certain that you need to print money to solve the debt spiral. That's the mathematics of it. The debt is growing just because of the interest coupon at a rate that exceeds the growth rate of the economy. And therefore, the economy and your tax base can never catch up to the expansion of the debt balloon. Pure mathematics, grade 11 math, as I like to say, okay? Grade 11 math. And yet no one's doing that mathematics. So you need Bitcoin to solve the fiat Ponzi. The fiat Ponzi, you got to print because you have so much debt, and that debt balloon is expanding organically just because of the coupon on the debt. Not to mention these fiscal deficits. Well, this one is paid for. Are you guys, who do you think we are? We didn't just fall off the turnip truck. You say this is paid for. Well, what happened to all your other accumulated debts? Those ones aren't paid for, but this 2 trillion is paid for. And here's a number that's going to blow your mind. Total debt in the United States, funded debt is about $30 trillion, okay? But unfunded debt, that's Medicare and Medicaid, is another $160 trillion. That's $190 trillion of debt. How many Bitcoin is that? 3 billion Bitcoin. 3 billion Bitcoin. Now, we only have 21 million, but the US has an accumulated deficit of 3 billion Bitcoin. Like, that number blows my mind. 3 billion times 60,000 gets you to your $190 trillion of funded and unfunded obligations in the USA only. Add in all the other countries around the world, and you can see why Bitcoin is the most beautiful hard asset and scarce hard asset ever programmed into our society. Math and code, baby. That's all you need to count on. Mathematics, the base layer of language. So you and I are communicating pretty well. Your English is amazing. My Bulgarian, I don't even know one word, okay? So, but the beautiful thing is we both understand mathematics. Like, even if we couldn't talk our second layer of language, which is our mother tongue, we understand mathematics. Mathematics to you is exactly the same as mathematics to me, okay? The symbols might be different, but the math is exactly the same. And that's why Bitcoin and the base layer of Bitcoin and the chain, then the Lightning Network, and then open source software and you know, the open source programming. That's why Bitcoin is the perfect solution and why I'm so excited about it to solve the problems that I've seen for the last 30 years. The financial system has been broken. It was set up to be broken. It's been broken for a long time. The question is, what's your insurance when it fails? Because it will fail. That's only math.
This is actually really related to one of the questions that I have written, which is about how do you get to that number of $2 million per Bitcoin? And more importantly, though, in one of the podcasts that I watched, again, in the past 48 hours, as we've done like a binge watching of podcasts with you, you mentioned that Bitcoin at the moment is worth to you 150,000. This is the value that it brings to you. It doesn't matter what the market value is.
That could be, no, that's the value calculated using the credit default swap market. That's only one metric. And the credit default swap market is not my market. It's a market that is an open market calculation. And what it basically says, now that's a dynamic number, and that number will change as more countries here's our very important Canadian, Pierre Poilievre.
Who is he?
He is a Canadian member of parliament for the Conservative Party, and I actually have given a presentation to him and 45 other of his cabinet ministers on Bitcoin. He owns Bitcoin. He has admitted that he owns Bitcoin. I helped him to buy Bitcoin. And he's a great Canadian who understands the problem with, fiat money and inflation and the printer going burr.
I was looking for this clip. It's from 16th of May, 2020. I shared it on my Facebook page. 0 likes because no one cares. Like, everyone's sound asleep when we talk about the economy and so on, and especially about Canada. And this Reddit this is the Reddit post that says no, I don't mean it. No, I don't mean it like
shoot, that they don't. The world.
Yeah, sure, but especially in Bulgaria, because Bulgaria is a very, in my opinion, again, I am free to talk trash about my country however I want, okay? In my opinion, we Bulgarians are too close-minded to thinking about my neighborhood and my street and my neighbors and so on, you know? Anyway, so this is a link that I shared to a Reddit topic. The text that I added by myself is как се отговаря на неудобни въпроси, which is how do you respond to questions that you don't like. And in this topic, God damn it, but the topic is but the topic is removed. But the idea is that this guy asks the financial minister in Canada, like, how much is the debt of the companies, how much is the debt of the households, how much is the debt of that, and then the other guy is like, this is a very good question.
It's a lady who's responding.
We'll look into it or so. I can't remember what was the answer, but they were unacceptable.
Okay,
you're the financial minister. How can you answer like that? This is unacceptable.
I love you, dude. I love you. And here's the neat thing. So Pierre and I have conversed privately. There's some exciting things coming from him. That's all I can say right now. But he's furthering the education of Canadians and trying to protect them against the false or the fallacies of our current governing prime minister, who has said budgets will balance themselves. Well, if you give a credit card to your kid and say, here, have fun, the budget will balance itself on this credit card, you know, you got to fire that parent, and you got to fire the CEO of that country, because that's not how finance works. And so it's about education, though, right? And that's what we're doing. What we're trying to do is to continue the education. But you asked me the question, how do I get to my $2 million price target? So first of all, I calculate the price of Bitcoin using the credit default swap market as over $150,000 US today, which means there's an arbitrage opportunity just in the open market of over $90,000 between the price of Bitcoin and what it costs you to insure fiat currency debt, which means there's got to be someone out there who's going to arb $150,000 times 21 million, which is $3 trillion of value. There's an arbitrage opportunity of 3 trillion. Man, as a hedge fund guy, I get excited about that. Okay, hey, bring it on. But for me, Foss, how does Foss get his price target? It's really simple. Total global financial assets in the world today are $900 trillion US. Okay, so that's the value of all debt in the world, which is about 400 trillion. It's the value of all real estate, which is about 300 trillion. It's the value of all currencies, commodities, and fine art, and all equities, all other stores of value, gold, which is another 200 trillion. So 400, 300 plus 200, that's your $900 trillion. There's at least another $200 trillion that we could add in there, but let's use $900 trillion as the total value of global financial assets, okay? I think Bitcoin becomes the reserve asset of the world. Why do I think that? Because I don't think that the US treasuries, which are currently the reserve asset of the world, are worth anything. Treasuries are a bond based in fiat money that is programmed to debase. They are the stupidest investment I've seen in 30 years of trading credit. More so, though, I think there'll be a day when Vlad Putin decides he wants to price his oil and natural gas in Bitcoin. Why? Well, because he's selling valuable natural resource energy for worthless US dollar fiat and storing them in US dollar treasuries. That's a dumb trade. And he's an engineer, or if he's not, he thinks like an engineer. Why would you sell natural resource energy for anything but digital energy, right? So price your oil and natural gas in Bitcoin, not US dollars, and you'll see Bitcoin quickly become the world reserve asset. irrespective of whether that happens, it's going to become the world reserve asset no matter what, because it's the hardest form of money ever created. Is it crazy then to think that Bitcoin will someday get 5% of today's $900 trillion of total financial assets? Just 5%. That's not crazy. That's an assumption. 5% of 900 trillion is 45 trillion. 45 trillion divided by 21 million, it's over $2 million a Bitcoin today. It trades for 60,000. What are you supposed to do, brother?
Yeah.
You close your eyes, and whenever you have spare money, you buy some Bitcoin and you store it in something that I'm highly confident, not certain, but highly confident will go up in value. Because today it should be trading at 2 million and it's only trading at 60,000, which means the market is only valuing it at 3%. The market is only telling me, Foss, there's only a 3% chance that you're right. Because 3% times 2 million, is 60,000. Well, at 3%, I'm like, Mr. Market, you're wrong. I'm way more comfortable that the chances of it worth 2 million are more than 3%. Is it 100%? No. But is it, in my view, at least 40, 50, or 60%? Yes, yes, and yes, which means Bitcoin should be trading at least 800, 900, 800, a million, or 1.2 million per Bitcoin at 30, 40, or sorry, at 40, 50, and 60%. That's a big delta.
Yeah.
Man, oh man, I've never seen a better trade than this in my entire life. This is the best asymmetric trade opportunity and investment opportunity I've ever seen in managing risk for over 35 years.
This asymmetric return reminds me of the other term, which is, using the information asymmetry that you might have. You know something that other people don't. Again, it comes down to your assessment that the chance of Bitcoin getting 5% of the, of the world reserve.
Yes.
Of the world reserves, like as a single asset.
Financial assets.
Yeah. Just 5% getting to it. Yeah. Some people just the way of thinking dictates that it's 0.0000001% chance, while you're saying, let's say it's 40% chance or 50% chance. So you're making a bet. And I remember during the bear market when Bitcoin was like $3,000 or $4,000 or $5,000 or $10,000, I was having the same thoughts. I was thinking how, like, this must be the matrix. Like, I can't be realizing something that the whole world is sleeping on. And again, when does this happen? When it's quiet, when you're sharing something very important in your Facebook wall, talking about how the financial minister, you ask him a question and he says, yeah, the credit situation in Canada is perfect. It's very solid. And at the same time he doesn't know the components that determine the value of the components that determine actually are they in a good credit position or not, because these are the questions. What is the credit value of this? What's the credit value? At the end, the talk ended with, so our financial minister doesn't know this and this and this and this, but he makes a statement. What is it based on then? Like, what is it based on?
Go ahead.
I want to pivot the conversation towards mining and electricity value. You talked about Putin. Recently he had an interview where he'd been asked about would he price gas in Bitcoin, and in that interview I think he said no, but maybe he said maybe in the future or something like that. I can't remember what were exactly his words. And now with El Salvador, we talked about Bitcoin becoming illegal tender there, being able to pay with Bitcoin through Lightning Network. I'm so excited. Again, I'm quite new to crypto because I follow it very closely since 2007. However, I haven't been just following it. I've been giving all my free time to educating myself. In the previous podcast, I've seen you talking about Jeff Booth and his book, The Price of Tomorrow. Yes. I found out about Jeff Booth from a what was it called? The media of RuPaul, something Vision, Clear Vision?
Real Vision.
Real Vision. Yeah, so in Real Vision, he was a guest there and he was interviewed by someone else. And there, Jeff Booth asked the question that I'm going to ask you to see if you saw this interview, if you know the correct answer. What is the most valuable thing in the room that you are in?
So to make sure I understand your question, in the room I'm in right now,
yes,
which is my office in downtown Toronto.
What's the most valuable thing?
My computer.
Okay, you haven't seen the interview. No, it's the air. It's the air.
Oh,
in 3 minutes,
absolutely.
you'll be dead without that. Believe me,
great.
you pressure the air the most.
How beautiful is that? Okay, so no, I'll tell you what. Look, I've traded against Raoul Pal my whole life, meaning there's positions that that he's been on the other side of trades, and that's okay. And I don't know him personally, and certainly there's some people in the crypto space that don't like him, and I'm not going to go there. I will just say I don't watch much of his podcasts. I do, though, love Jeff Booth. Jeff Booth is a Canadian. He's a beautiful person. He's also a good friend of Pierre Poilievre's. Okay, so myself, Jeff, and some of the Canadian ministers in Parliament, the MPs, are trying to learn more about the Bitcoin blockchain, sound money principles. And Jeff's book, The Price of Tomorrow, I will say, and I've said it numerous times, is the best book I've ever read. And there's only 5 pages in it, or less than 5 pages on Bitcoin itself, but it just leads you to the ultimate conclusion as to why technology will change. There'll be 100 years of change in our lives. There'll be 100 years worth of change in the next 10 years. And you better be ready for this, baby, okay? Because that's what technology brings. And the kids are growing up with the iPhone in their hands. But when I graduated in 1986 from engineering, I'd never used a personal computer. They did exist, but they weren't available for students. And I had done all my programming on mainframe computers. And the funny thing is, kids these days grow up with an iPhone in their hand, and the computing power in that iPhone is more powerful than the NASA computers that were used in 1969 to put 2 men on the moon. And I remember that. I was 6 years old. Well, I remember seeing Neil Armstrong on the moon. And I'm like, dang, in my hand, in my kids' hands, they have an opportunity to have more computing power than put 2 men on the moon. This is why the world is going to change so quickly. And Jeff Booth has lived that. Pierre Poilievre is getting the benefit of a very smart Canadian like Jeff Booth. And I'm along for the ride, okay? I enjoy being in the company of people that are going to change the world. And these people are going to change the world. So there's Jeff, and beautiful. So
this is
I can't...
it's in Bulgarian. I translated.
No wonder I can't read.
I translated.
My eyes aren't very good, but
I translated what he said, and my point is that this was my first, my first, how's it called? Point where I met Jeff Booth. So it's 31st of March 2020. It was a Real Vision interview with him. It wasn't Raoul Pal, it was some of his colleagues, some of his team. But my point is, this is the first time I found Jeff Booth. I didn't know anything about him, no story, no books, nothing. But what really captured me was this. He talked about there. He said, "What's the most valuable thing here? It's there." And why? Well, because without it, you die in 3 months. In 3 minutes, you just die. That's it. So
it's like a fish in water, right? It's what's the most valuable thing to a fish? It's the water, you know. And it's the same thing. Like you sort of forget about it. You forget about the water until there is none. So you forget about the air. So it's a great. You got me, man. That's cool. I'm going to use that line, and I'm going to use your
perfect line.
Hey, by the way, who is Anelia Koleva?
It doesn't matter. It's just an account that I'm using at the moment. No. It's an account that I'm using. No. Here it says that the economic is based on deficit, and technology creates abundance. In the room that you are in, the most valuable thing is air. Without it, you die in just a few minutes. But air is free, meaning oxygen, because it's abundant. You could sell air if you want to, oxygen, underwater where there isn't abundance of it, and you can sell oxygen if the air gets so polluted that there is again not enough of it for you to breathe. But outside of these scenarios, oxygen is just free because it's abundant, and technology creates abundance for everything. So this is the quote I got from that interview.
He's a brilliant guy. And so listen, Jeff and I traveled in my truck because I grew up in Montreal. I mentioned that, and so I drove from Toronto to Montreal, and then I met Jeff. He flew from Vancouver to Montreal, and then together we drove across the border to meetup in Bretton Woods, New Hampshire. So Bretton Woods is about 2.5 to 3 hours south of Montreal. You have to cross the U.S. border. It was in August. It was when travel was restricted on land travel. Air travel wasn't restricted, but flying into Bretton Woods, New Hampshire is nearly impossible. So we decided to drive, and it was a chance for me to spend 2.5 to 3 hours in each direction. So a total of 6 hours at least in the car with Jeff. And I'll tell you, I learned more in that 6 hours than I did in my entire university degree, okay? And this is the difference between learning and being brainwashed with Keynesian economics in university versus sitting down with a guy that's actually done it. He built a technology company. He lost the technology company from growth. He just grew too fast, and then his capital contributors rug pulled him. But the point is, he was almost broke and has turned that experience into a positive experience where he found Bitcoin. He's now out teaching the world the benefits of Bitcoin. There's a chance that he'll be traveling through Eastern Europe in the near future. If you want, I'll definitely put you in touch with him. I think he'd love to come on your show. He's just a really great guy. And why is he great? Because he says it very sincerely. He says he doesn't care where the price of Bitcoin goes. He just knows that it is the solution for the future, and the price will take care of itself, okay? And my price target of 2 million is not based on the fact that I think it has to go there immediately. It's just based on the fact that as adoption takes place. So I'm tight with the guys in El Salvador. I was in Miami with the CEO of the El Salvador Merchant Solution 2 weeks ago. I spent 3 days with him. His name is Jose Lemus, and he's a really good Lightning programmer, and his team are excellent. And what they're doing in El Salvador is life-changing stuff, okay? And by the way, they're going to import that to the city of Miami, okay? And then once Miami gets a hold of it, you watch it take place, because unfortunately, the city of Miami is more valuable than the entire country of El Salvador, okay? That's just another economic reality. There's 6 million people in El Salvador. 4 million of them don't even have a bank account. There's how many million people in Greater Miami? I'm going to say 2 million people in Greater Miami. And combined, they have way more economic power and net worth than the entire country of El Salvador. Well, when you take that technology from El Salvador and you import it into the city of Miami, you're going to see some good shit happening, okay? This is what's exciting about things like the Lindy effect, the things like the adoption curve, the network effect, all of that stuff that is absolutely a fact of life for technological revolutions. And that's what Bitcoin is. It's a technological revolution.
This is what I say. Tell me if I'm seeing it incorrectly. So what I say is exactly about El Salvador, how 40% of the people only have a bank account there. And the question is like, why? Are they stupid? Like, just go make a bank account. So no, firstly, the banks require you to have ID cards and so on. They ask you to fill in all the data and so on. But secondly, though, a bank, a commercial bank, is a company. They're a for-profit organization. They have expenses. They have rent for their offices. They have employees that they have to pay, or guards and so on. And the thing is, all of this is expense. And then you have to charge, like, I don't know, like $30 monthly fee to El Salvadorians. This is never going to happen, right? If you have to onboard the whole population. Well, with Lightning Network, with Bitcoin, the saying, be your own bank, literally comes into power, where you take the responsibility, and therefore it's cheaper for you, because I pay zero monthly fee for my Bitcoin to stay on my address. It just stays there, but I'm responsible to keep my private keys in a safe place where I don't lose them. So, and then the global brands like McDonald's and the Starbucks and so on accepting Bitcoin there. I've been saying this for the past month since it started. I'm thinking this is going to be a pivot moment for Bitcoin, because the managers there for these large brands that are there, Zara, I think I heard also, and so on, like big brands, international brands accepting Bitcoin there, they already have the know-how. Like, they've done it, they accepted it, they know the accounting, they know the technology. Miami, right? Yes, so it's easy. It's easy to port. They just make a meeting, make one of these boring Zoom calls where you explain to the team across, was, how to do it, and they just do it, and then done. The technology just works. And again, in El Salvador, the gasoline being 30 cents cheaper or whatever it was, if you pay with Lightning Network, just because they're being able to save from the visa fees and so on. Like,
yes, exactly. Yeah. Yeah. Like, no, how much cheaper did you say?
I think it was 30 cents. On the gallon or on the liter, I don't know.
I wonder. Okay, how would that work if it's 8% and the gallon is let's say the gallon is $3 US a gallon, and 8% of that is 24 cents, 30 cents, let's say, and that's what the Visa fees are, right? Visa is 8% of the merchant fee.
That's crazy. I didn't know that. About the
well, that's sick, right? And this is so I use the restaurant example. This is for petrol stations, right? So, man, it's look. I'm just telling you. And by the way, Bitcoin. Visa is worth $410 billion. Okay, that's the market cap of Visa.
My God.
Visa better do some shit. Or
they are though. They are though.
Oh, that's okay, but they better, because if they don't, they're going to be disintermediated as well. Because we know those fees are going down. They have to. If they don't go down, they're not going to be competitive, and they'll lose all their merchant fee business. Okay, but at the end of the day, smart companies will take measures that allow them to preserve their enterprise value, and I think that I just saw an ad where Visa put out in the last 24 hours, they posted 10 different jobs for crypto. They called it crypto, but I'm pretty sure they're focusing primarily on Bitcoin, on crypto programmers and the like. So they're doing what they have to do. They're worth 410 billion. Western Union's worth 6 billion. Western Union's gone. Okay, see you, Western Union. Thanks for raping and raping the eyes and taking the eyes out of people doing remittances from third world countries and making a business on raping and pillaging the money transfer business. Okay, so you're done. But then the next one is Visa and the merchant fees, and those will come down, and they're going to come down in Canada too, because I and my restaurants are going to implement Bitcoin payment rails. Why? Because it's good for my business. And once we start doing it in Canada, and people like the Real Tahinis in Canada are doing it, they're investing their treasury reserves in Bitcoin. It's part of a movement where people understand that you need to hedge the risks of your business against legacy financial institutions and fees that can now be mitigated. Yeah, it's really important.
Greg, in order to time manage the remaining time that we have, can you please confirm how many minutes do we have? 60 minutes, 50 minutes? How many
60,
is it?
Yeah. Let's do, how about 60 minutes? So 11:25.
Okay.
60 minutes.
All right.
Yeah.
So I'll go, listen, let me do this. I'll go through 5 questions. I'll just mention them. They're interconnected. And then we pick it up from whenever you think is best. Okay.
Okay. I'll write them down. So go ahead.
Okay. So I will read them in no particular order. Okay. We have to order them. Okay. One is about the El Salvador bond that they're saying.
Okay.
We want to do the Vulcano bond. We want to buy Bitcoin and so on. Okay. You get it.
Yeah.
Okay. The other and connected to it is also the IMF that warns constantly El Salvador. Bitcoin shouldn't be a legal tender and so on. Okay. So IMF plus El Salvador. The other question that I have written down is in general bonds. I would like to go just on the topic of what is a bond, what is a company bond, what is a government bond. And from the previous podcast that I watched with you, there is crazy story from your first job with the Royal Bank of Canada. I was like, are you kidding me? Like, this is insanity. Like, what is happening here? Okay, I would like for us to go through that one because it's just crazy important. Another one is, if I understand correctly, you started really going down the rabbit hole of Bitcoin in 2016. So what I would like for you to comment on through your eyes, how much did Bitcoin and Bitcoin adoption and so on, everything around Bitcoin changed from 2016 and 2021, so for 5 years? Because it looks like not much, but no, it's like so much have changed. So much have changed. I've just written a note. I've written a note about the Fed giving nutrition advice, don't purchase a turkey, use soybeans or whatever it was, because it gives the same amount of protein. You haven't seen that? It blew up on crypto Twitter. They literally said, because for Thanksgiving the turkey is too expensive, just use these subsidizes, and maybe it's better not to buy turkey. Like, it's offensive.
Are you kidding me? Are you kidding me? Okay.
Jack Dorsey. The next one is Jack Dorsey, focusing on Bitcoin, because he says, like, this is gonna be my primary goal from now on. We're gonna look into decentralized exchange, fiat on ramp. We're gonna look into mining. We're gonna look into a hardware device. And just a second, I'm sorry, they're a bit more than 5 apparently. Just a second. One is just about outlook of the future if there was no Bitcoin. Because I heard you in one of the Bitcoin saying that you're so happy that Bitcoin exists, and you said that you have 3 children. What about if Bitcoin did not exist? How positive or not positive you're gonna be for the outlook of the world without Bitcoin? And about the Jeff Booth Price of Tomorrow book, which segment or one, a chapter or one thought that captured you the most, and just like you would say that this is the most important one from the book?
Okay, great question. So let's hit that last one first, because we were just almost talking about Jeff, and like, I love that thing about the air. That's beautiful. So I learned a lot today from you, so thank you for that. Ultimately, it came from Jeff, I guess. But so what did I learn most about from Jeff? Again, I think I'll just state it again. Look, there's going to be 100 years of change in the next 10 years. Okay, there's no way you can know for certainty how any of this is going to play out. And you basically, and this is me paraphrasing, you need to hedge your bets. Okay, you need to, when you hedge your bets, it's a form of insurance, and you need to have various forms of insurance against something really bad happening, or conversely, participating in something really good that's going to happen. So we'll just leave it there. There is going to be 100 years of change in the next 10 years. 100 years meaning when I grew up, the automobile was less than 100 years old, and now it's just over 100 years old. So when I was young, but the point is, in that 100 years, you're going to see the same amount of technological change in the next 10 years as happened in the previous 100 years. Okay. So that's Jeff Booth, and yes, the best book I've ever read. So let's hit RBC, okay? My experience at RBC, which you brought up.
I'm sorry, okay. Just a second. Just I want to say about the Lindy effect and Jeff Booth. One of the things that really hit me, I just didn't know it, because when I was a kid, there was the Kodak company, and it was dominating. Yeah. And it was dominating the old photography with the films. The films. And they were so focused on selling films because they were 70% of their revenue or whatever, and everyone was just thinking this company have been growing for, I can't remember what was, like 70, 80, 90 years straight or whatever it was, and then I can't remember again, it was 5 to 10 years they bankrupt. So company just straight line up, growth for almost 100 years.
But they also developed a digital camera. You know that, right? You know that.
What I remember from the book was that an employee of theirs pitched it to their board. They thought,
well, same thing. But they had the ability to develop it, and they decided against it.
Exactly.
But here's another thing. You know, so Kodak was in the Dow Jones 30 at one point, right?
Yeah.
Over time, I think 25 of the 30 components of the Dow Industrials have bankrupt themselves over the last 50 years. It's a fact of creative destruction. So Jeff mentions this in his book. Capitalism is creative destruction. And when you suppress creative destruction, when you continue to finance zombie companies that otherwise the capital markets would efficiently deconstruct or get rid of, and you are keeping in business zombie companies that otherwise should be allowed to self-destruct, right? So that's what the Fed does when the Fed gives money to high-yield companies and backstops or starts buying high-yield bonds in the open market. It effectively provides funding for companies that otherwise should go away. It makes for more inefficiencies. Jeff brings this out in his book as well. But so maybe enough about Jeff. I'll talk about my history. So I'm 1986, I graduate from McGill Engineering, and I said, even when I was at McGill, I knew I didn't want to be an engineer, but I loved our full-time practicing engineer, but I loved the mathematics. I didn't want to go into business right away. I said, you can transfer from engineering to business at any time, but you can never transfer back from business to engineering without losing all the credits that you did in engineering. So I stuck with engineering. 4 years later, 1986, I graduate, and I'm like, okay, I don't want to be an engineer. What am I going to do? And I was lucky enough to get accepted at a business school in the United States. The only school I applied to in the US, because it was a strategic decision. They were trying to build their international business school community. And I thought, and rightly so, that I had a better chance of getting accepted there with no work experience than if I applied to other US business schools. And I actually had even a better chance of getting accepted there than local Americans had getting accepted there with no business experience, again, because they were trying to build the international business school. So luckily enough, I got accepted at Cornell, and I went right into the Cornell Business MBA program. And I was one of the youngest kids in the class because of no work experience. And it was a great experience for me, but I 2 years later graduated, come back, had a chance to work on Wall Street, and I wanted to be a financial engineer. Okay, so it's a little quirky, but yeah, I was still in engineering, but I was doing financial engineering. So restructuring, I was doing trading, I was doing hedging, or is what I wanted to do. And my first job was working for the Royal Bank of Canada, and I was working directly for the CFO in a special projects group that would include things like mergers and acquisitions. But one of the first projects I was given was to evaluate our Latin American debt portfolio, because Treasury Secretary Nicholas Brady had proposed a restructuring of Mexican debt. Okay. And Royal Bank of Canada owned about, it sounds like such a piddly number, owned about $1 billion worth of Mexican debt. Now, $1 billion in 1988 was a lot of money. Today, it sounds like a bit of a rounding error. But when I think of it, it's the same amount of money that El Salvador is trying to raise in their bonds. So we'll get to that. Okay. So El Salvador is trying to raise $1 billion. Well, RBC had lent $1 billion to Mexico, and Mexico had defaulted. Now, RBC wasn't the only international lender. Most other money center banks in USA and globally had also lent a ton of money to the Latin American countries. It was basically recycling of petrodollars. So all the global banking system had exposure, and they needed to solve it. And why? Well, Royal Bank is a classic example. I did a quick analysis, and I looked at our portfolio, and the portfolio was basically trading at 25 cents on the dollar, which means we would have to write down 75% of our loan exposure to write that to the market price. And if you did that, the loss that you'd need to take was greater than the book value of equity. That book value of equity is the capital reserve that you take your loan losses from. If you did that, the book value of equity of the Royal Bank was negative, which means Royal Bank was insolvent. And I'm like, holy shit. I just spent 6 years in school to come back and find out that the global banking system is bankrupt. So I go to our CFO and I say, Emil, like, we have a big problem here. And I swear to God, and God bless his soul, he said to me, I know, don't tell anybody. And I'm like, what? Royal Bank of Canada is bankrupt? And I'm 25 years old. This was 1988. So yeah, I was exactly 25 years old. Am I going to go run to the Wall Street Journal or the Montreal Gazette or, you know, the National Post in Canada and say that the Canadian banking system is, you know, is done, and, you know, destroy my financial career? And then people look at me like, you know, what does this kid know? Don't you know that the banks are too big to fail and that the government will bail them out? And that's the truth. That's when I first was exposed to the fiat Ponzi. That's why people hold their deposits in the banks globally, because everybody believes that no government will let a major financial institution fail. Because for every loan that the bank makes, Plamon, every loan that they make for $100, they only have $5 of risk absorbing capital, and the other $95 is deposits and subordinated debt, which means if the value of that loan loses more than 5% of its value, let's say it's a real estate loan, they're chewing into capital that doesn't exist. unless they've taken loan losses and unless they blend the loan losses over their whole portfolio. Banks are levered 20 to 25 times their equity. That's how banking works. And that's how I mentioned why you need inflation to ensure that capital asset values, or the value of collateral that's pledged as security against the loan, increases in an inflationary environment. You see how it all works? Anyway, 1988 was when I first discovered that I needed a hedge against the fiat Ponzi.
And
I didn't go into gold, but go ahead.
One thing that you didn't say was that about that accounting trick.
Yes.
Where,
you want me to say that? Okay,
yes,
so basically
yes.
so the Brady solution for Mexico was brilliant, okay? Basically what they did is they said, you need to take the value of your loan, which is now 25 cents on the dollar. You need to extend the maturity from a 5-year obligation to a 30-year obligation. And you need to, this extension will allow you to be collateralized by U.S. Treasury zero coupon bonds, which over a 30-year period will go from 25 cents on the dollar up to parity, up to par. Again, a financial gimmick, an accounting gimmick that allowed them not to have to write down the value of their loans. They just extended the maturity, extend and pretend that it's still worth $100. Now, the funny thing is, it was a great solution. It was based on accounting gimmickry, but it made the value of those bonds pretty attractive. So what did I say to the CFO? I'm like, Emil, we got to go out and buy some of these things now. And guess what his response was? No, thanks. We blew our brains out at 100 cents on the dollar. Why would I want to buy any more at 25 cents on the dollar? Typical stupid bankers that just lend at 100 cents and then write things off at 25 cents rather than maybe purchasing some more at 25 cents on the dollar. You know, the price of those bonds actually went to 130 cents on the dollar because of changes in interest rates and because of the price of oil and all the things that go into calculating the value of those bonds. If we had bought another $1 billion worth at 25 cents on the dollar, or in fact spent $1 billion, which meant we could have bought 4 billion face dollars at 25 cents on the dollar, our $5 billion exposure total that went back to par, we would have made 4 billion times 75 cents. We would have made $3 billion. Damn. Now that's why I love financial markets, because, you know, there's a price for everything. Anyway, the Royal Bank didn't do it. I left the Royal Bank. I started working at a hedge fund where I could make those types of trades. I wasn't hamstrung by inefficient investment policies of and the like. So yeah, that's a great question on Royal Bank.
For me, the moral of this story is, I would call this corruption because it's a cover-up. Someone messed up, someone made a mistake, someone made a wrong call, someone after that covered things up so no one knows about it with accounting gimmick or whatever.
Oh, but here's the neat thing. Well, yeah, okay, yes, to that extent, so that the common man doesn't know about it. The common person doesn't worry about putting their money in the bank and saying, there's a chance I won't get my money back.
Yeah.
And look, I mean, there's plenty of banks that fail in the US. Here's the difference. I don't know how many banks there are in Bulgaria, but Canada only has really 7 or 8 truly national banks, okay, that stretch from coast to coast.
Yeah.
In the USA, when I was there in 1988, they had 15,000 different banks. 15,000. The rule of 1 in 10 usually applies in Canada to the US. So our GDP is 1/10 the amount of the US. Our population is 1/10 the amount of the US. But if you took 15,000 US banks and divided it by 10, you'd expect there to be 1,500 banks in Canada? No, we have a different banking system, and some people would argue that it's a strength, and others would argue it's a weakness because we're just 6 stupid banks that won't do anything. If the other 5 don't do something, there's no way that the 1 in 6 will do something. So right now, the Bitcoin adoption in the banking system in Canada is almost 0 because none of them are doing anything. They're scared as shit, but they're not going to do anything because they don't want to rock the boat against their other competitors. But as soon as one of their other competitors does something, all other 5 will run to that.
This week, in Estonia, the largest bank announced that they will offer buying and selling crypto through their banking app.
That's
just
smart.
this week.
That's really good.
And
good.
in US in 2020 it started, in 2021 it continued. Bank after bank after bank started offering crypto services to their customers.
Okay.
At the beginning, it was only to our wealthy clients, right? It started with like 3 million or 15 million or whatever, plus we had to have in equity and so on before you can do that. But now, after PayPal, offering crypto and so on, it's getting more and more, and NIDAC doing all the infrastructure for the adoption, more and more bank will offer crypto. And we had, literally yesterday, I put this poll, when do you think in Bulgaria, the Bulgarian banks, there again also like 6-7 banks, will start offering crypto? Will be next year? What's the chance? Over 50 or under 50%? And most people don't believe that it's over 50%. So what do you think? When would there be a bank in Canada that will offer through their online banking account app being able to purchase Bitcoin?
Damn. When do I think? I think it will happen, but like anything, you can put a target, but not a, you can put a price target, but not a time, or you
Sure.
I'll
change the question.
Within the next 5, within the next 5 years, but that's really lame, right? It should happen within the next 5 months. But it's not going to. So it'll be somewhere between 1 year and 5 years from now.
I see.
You see things like the Aussie Bank doing the same, an Aussie superannuation fund investing. It'll be a tidal wave. Canada tends to be a bunch of sheep. No one does anything until one person does it, and then we all do it because we're very concentrated. Our pension funds are very concentrated. Our banking system is very concentrated. And, it's don't rock the boat until, one person did it, then we better all do it, So it's called the theory of agents. But this is a good time to discuss what bonds are.
Yes.
And why bonds are the worst investment opportunity I've ever seen in my 30 years of managing bonds. A bond is a fixed contract. It's called fixed income because the coupon that you pay on the contract for borrowing money from somebody is fixed, okay? It's fixed and it doesn't change because your financial situation changes. It's the contract, and what happens is the price of the bond will change as the likelihood of you being able to repay the coupon changes, right? So in theory, let's look at the loan, which is like a bond, a loan that Royal Bank of Canada made to Mexico. Mexico was going along well. They were charging an interest coupon on that loan that reflected the rate or the risk of that counterparty in an open market rate. But clearly things went south for Mexico and they weren't able to make that coupon and they defaulted on the contract, right? How do you default on a contract? You basically say, okay, this contractual obligation that I'm required to pay, I'm not paying it anymore. No different with any other borrower-lender scenario. The price of that bond will change because the coupon is fixed. And if that coupon should be, let's say, an 8% coupon to reflect the risk of that counterparty, but the coupon is only priced as a 4% coupon, well, the price of that bond will go down so that the overall yield, which includes the repayment of principal at maturity, the $100 that you borrowed at maturity, the IRR, or the yield, the internal rate of return of that contractual series of cash flows, equals the present value of the price of the bond. Okay, that's what bonds are. They don't change. If something gets better with a company and the coupon should now be 3%, but it was struck at a 4%, the bondholders don't say, oh, you've done so well, we're going to cut the coupon. We're going to thank you for becoming less risky, but we're still going to charge you the coupon because that was the risk that we took. And the price of that bond will go up to reflect the fact that those coupons are higher than is otherwise required for a credit quality of that counterparty. Okay. This does not include any talks about inflation, and I'm about to go there, but go ahead if you have a question.
I was going to say that there is one other important thing that I would like you to mention because it's very important in my opinion. It's the bond discount price, for, let's say, for $1 going to 50 cents to the dollar or whatever.
Yeah.
Related to the equity, from my perspective, from what I understand, also is pretty much like the stock price.
So this what you're talking about is the priority of claim of a bond. Okay, so in the capital structure of any enterprise, you have equity, which is ownership of the company that's non-contractual. You can have dividends on that equity, but none of those dividends are contractual obligations. Normally they say, we'll pay a dividend if we can afford to pay a dividend. Prior ranking in the capital structure is your debt. And this debt contract is much like I explained. It could be debt in the form of a loan. It could be debt in the form of a publicly traded bond. It could be debt in the form of IOUs. All of this ranks senior to the equity. In the event of a restructuring, debt holders get paid before equity holders. In other words, unless the debt is worth 100 cents on the dollar, the equity is worth zero. So you can call a company a junk bond company, but then what do you call the equity? Super junk. Okay, it's just a pejorative. Okay, yeah, it's a risky bond borrower, which means the equity is even more risky. It's a pejorative. Okay. Don't mess around. As long as you get rewarded properly for your expected returns, you can invest in those parts of the capital structure.
Restructuring. You said restructuring. What do you mean by the word restructuring?
When a company defaults, meaning they don't pay their coupon, it goes to the courts, and the court of law imposes a solution where you have to make your creditors a proposal to try and pay them back some of the value. That is called a restructuring. The original contract needs to be restructured. What generally happens is those bonds turn into the equity, the new equity of the company, and the equity that was there gets tossed away, they restructure, and this is an equity portion of the capital structure, and there may be a carve out for some portion of new debt, but it's a restructuring. You have restructured the capital structure of the company under a court of law.
Okay, and what you were explaining was that there is this trade where you buy the bond and short the equity.
Yeah, that was my whole life, okay? Because look, I bought bonds at 40, 50, 60 cents on the dollar, and I wasn't sure I would get 100 cents on the dollar back, and in order to hedge that, I would short the equity or buy puts on the equity. Now, I wouldn't do it dollar for dollar, but there was a proper formula depending on the company. If I bought $1 million worth of the bonds at 60 cents on the dollar, so I spent $600,000 up here, and they had publicly traded equity, I might say, okay, in a restructuring, I get 40 cents on the dollar back. Therefore, I need to hedge 20 cents, right? I need to hedge $200,000 worth, and I need to hedge it. And I'm going to use put options that are struck at a price here because I don't want to have danger of the stock going up, even though there's not a lot of danger. Stupid money buys equities when the bonds are at 60 cents on the dollar, but there's a lot of stupid money out there. We talked about AMC and we talked about GameStop. And look, all these guys are going to send hate mail to me, and go fuck yourselves, okay? Because if you were really smart, you would have bought the bonds of the company and traded into the equity as the bonds reflected a recovery value, okay? So go fuck yourselves, you stupid fucks. And I'm sick of talking with you guys. You don't know how capital structure works, so that's okay. Didn't mean you didn't make money. You just didn't make as much money as you should have, and you took more risk than you should have if you had done it properly. Anyway, you can hedge using a senior claim in the capital structure, and rightly so. And sometimes the bond price goes up and the equity price goes up, and you've given away some of your upside. But what happens if the bond price goes down? Then your equity price is your equity hedge short is making money. And then that's how you arbitrage markets. And that's what I spent my life 30 years doing. And there's a lot of inefficiencies because most people in the equity markets have no clue where the bonds of a company are trading. And they say, oh, the stock's got to be cheap at $5 because it's down from $25 a share. It's got to be cheap at $5, right, Clement? Yeah, it's not cheap. You're now an option, you dumbass. And if you're buying it at $5 and the debt is at 60 cents on the dollar, you're not making the right trade.
And I wanted you to go through this and explain it because, again, I just learned it and I thought that it's, it's fascinating. I didn't know about all of these things. And the one thing, though, that also I was surprised by was that in another podcast, they asked you, like, where can I see the price of the bond? And you said it's traded over the counter. As a retail investor, I can't see it. Is that correct?
Pretty well. I mean, look, if you have a Bloomberg machine that costs you $20,000 a month, yeah, you can get the price of most over-the-counter traded bonds. There are some websites that you can get them, but the chance of you being able to buy them on your retail bank platform is very low. Okay. First of all, they'll rip your eyes out again. If the bonds are trading in the open market at 60 cents, you probably have to pay 65 cents to own them through your retail platform, which is why being an institutional investor or a hedge fund is so important, because that 5% or 5 cents is actually almost a 10% fee, right? $5 on a $60 bond. And that's how it works. Just one more example of a financial institution that has you as a captive client, right? As a captive client, you can't see bond prices trading at different dealers and everything. That's where I spent my life, where I was covered by all the dealers from JP Morgan, Goldman Sachs, Wall Street, Morgan Stanley, London-based accounts. And this is, or London-based trading desks. This is where you get in the pits and you earn your stripes as a risk manager. So that's what I did for 30 years. And that's why I always start my analysis of an investment from a credit lens. Credit runs the world. Credit is 4 times. Remember when we laid out the financial assets of the world? Credit is $400 trillion and total global equities is about 100 trillion. Total global debt is 4 times the size of global equities. Don't you think you should figure out where this thing is trading before you invest in the subordinate claim in the capital structure? Fuck no, you guys are idiots. You don't even understand capital structure investing. And the Fed just handed you money to invest. So you read on Reddit that, you know, you got to short squeeze a trade on AMC. Well, the smart thing would you have bought the AMC bonds at 1 cent on the dollar, and you would have made 100 times your money before the equity was worth anything. But it's a process, and the equity becomes an option, and the option then therefore gets in the money. I congratulate you guys for doing it. Just understand you didn't do it the right way. You made money, but you took the wrong path from a risk-adjusted basis. So congrats to you, but you still failed Finance 101. So that's good.
I'm out of the loop. I really don't know. I've seen other podcasts also being congrats of you. I don't know who they are and what they're talking about. It's not my audience though, but we get it.
Okay.
We get it.
All right. Good. Let's go. Let's hit. So the Fed gave nutritional advice. No comment. The Fed are a bunch of buffoons. Okay. Now they're really venturing outside of their. Oh, so inflation is this. So I'm going to tell you how to eat now. Go pound sand, Fed. Okay. You can't even manage your own. You can't even manage your own stuff, and now you're giving nutritional advice. How about you focus on managing your own balance sheet first, because you're doing a horrible fucking job at that. So yeah, that's unfortunate. I saw a thing where the average turkey dinner in the US, and by the way, happy Thanksgiving to all the US people out there. Great country, greatest country in the world, in my opinion, and I'm a Canadian, but the USA is the greatest country in the world. It is the last bastion of freedom of speech. It now costs you 14% more to buy this year's turkey dinner than it did last year. Isn't that interesting? Because the original formula of calculating inflation in 1980, if you had used the original formula to calculate this year's consumer price index increase, the posted number was 6.2% using an adjusted formula. If you had used the original formula from 1980, the number was 14%. Exactly what your turkey dinner cost you more this year than last year, 14%. Okay, posted inflation is not the true inflation, and this is another way that the Fed is fucking with you guys. Okay.
Greg, listen, about the inflation, here is the thing. In my opinion, everyone has personal inflation depending on what you do, depending on where majority of your expenses go, depending on, are you living in a 1-bedroom apartment, you're just fine, depending on, are you a family of 3 or of 5, and are you buying Pamperses for your kids and so on. Like, there are different products that go in your basket depending on, do you already own a house or are you renting, depending on, do you have a lot of excess income and you like traveling the world. Let's say plane tickets will be a major part of your inflation basket and so on. And one of the questions that I have written but I didn't add was about the hyper Bitcoinization. If by any chance we really do turn into Bitcoinized world.
Yeah.
And in that scenario, when I want to save, I don't put my money in my bank account at 0.01 interest.
That's
if
correct.
I get even that.
Yeah.
And in Bulgaria at the moment, at deposits over 750,000 euro, you get negative.
Yes,
you get negative interest rate.
Yeah.
So, and the thing is, a lot of people, in order to escape inflation, to escape negative interest rate, or even if it's zero, it's still negative because of inflation. They
Yes,
put
correct.
everything.
That's called real. That's your real return. Yeah, is negative.
They put everything in S&P 500 or Dow Jones or something else.
Yeah.
In Bulgaria, specifically, it's very prominent as an investment real estate. Like everyone just buys. Let's buy a flat for the children.
That's a form of hard asset. It's just, what if you need to leave Bulgaria really quickly?
Yes.
Do you take your flat with you?
Yes.
I don't think so. Okay.
Yep.
Can you take your Bitcoin with you?
Yep. Yes.
Darn right you can. That's why portability is such an important component of the beauty of Bitcoin. It can be portable anywhere, and you don't have to have it in your pocket like a gold bar or shoved up your like other valuables. You can store it in your brain.
Just recently, because if in Afghanistan, I think it was, where the US left, right? And there was, and my point is that I commented on that imagine someone who had like 25 flats there, right? And he was living off the flats there, off the rent in the capital or whatever. Like, I don't know what exactly the situation, but just picturing a picture here. And my point is the following. Now he has to leave the country and he leaves empty-handed. He has nothing. Well, he put 5% of his net worth in Bitcoin. He at least takes that. So this is a problem that Bitcoin solves.
It's called risk management. It's called risk management. I'm not saying to put 100% of your assets in Bitcoin. I'm telling you to own some insurance. I think the right number is, I'm going to tell you, for someone that owns zero, the right number is not zero. You need to own some Bitcoin. If you are taking far more risk owning zero Bitcoin than if you own a proper portfolio allocation. And it's up to you to determine what your proper portfolio allocation is. My portfolio allocation is around 40%, but there's lots of people who claim to be at 100%. And I'm okay with them saying that, but I just manage risk a little differently. And, I have 3 kids, and the reality is I need some other assets besides my Bitcoin to allow those kids to go to school and live a life that'll allow them to prosper in the future. So my number is 40%, but if you own zero, let's just take this to an extreme. If you own zero, you are taking far more risk than if you own 10%, okay? 10% is a number that has been published by Yale University. There's plenty of studies that will show you can actually reduce your portfolio risk and increase your returns by owning between 6 and 10% of your portfolio in Bitcoin. So that's what you should own.
In hyper-Bitcoinized world, do you agree with me that the price of everything is going to fall? And what I mean by that is, when I was in London...
As measured in Bitcoin, yes, as measured in Bitcoin.
Not only. I mean, when I was in London, I saw like 1 out of 5 flats in the city center of London are empty, lights are out, and they never get on. Why? Because Chinese and Russians, all of them, and they don't live there. They don't want to deal with freaking people that rent it. They just want to have money stored somewhere else, not where Putin can touch it or that person can touch it. They can just at any point catch the fight, go there, and they have their money with them. And in a world where Bitcoin is a lot more recognized than it is today as a safe haven, people will just put the money there.
Could be. Here's what I do know, though, true. Ray Dalio just published something that's quite profound. He basically said the value of all financial assets is measured in fiat is far greater than the intrinsic value of them, including properties like that. Again, when you see an alternative to a hard asset like fixed property, you might look at it and say, darn, I better sell these flats. And then all of a sudden, everyone's trying to sell all these flats to get into a better hard asset called Bitcoin. And you're right, the price of those flats could come down materially. All I would say is this, though. Anything is better than holding your money in fiat, holding your savings in fiat. So is real estate better than holding your money in fiat? Yes. Is gold better than holding your money in fiat? Yes. Fiat is the worst store of value, preservation of wealth that there is. The second worst is bonds. because bonds are a fiat contract, okay? Fiat contracts are programmed to debase. The $100 that you lend at time zero, if you get your $100 back in 10 years on a 10-year bond, what's the value of the $100 you get back? It's certainly not the same as the purchasing power of the $100 you lent the company, right? Or the government. So bonds are a horrible investment today, as reflected in real yields, accounting for their posted inflation or true inflation, which could be closer to 14%. Do not touch bonds. Do not save. If you have clients or family that's holding $750,000 in a bank account and paying to put that money there, I don't know how they got $750,000, but they're fucking morons, okay? So they shouldn't be holding them in a bank that they are paying money to hold their deposits, and the bank is very risky. We already walked through why the bank is actually very risky. So actually paying to hold your deposits in a risky institution is stupid squared, okay? They're being stupid to the power of 2 or 3. Man, yeah, education, intellectual laziness, all reasons why you need to educate your financial brethren. So the next one was, let's talk Jack Dorsey. Look, I think the guy's brilliant. He's got lovers and haters. Some of his stance on various politicians caused him to be not liked as much, but I think his viewpoint on Bitcoin is spot on. I think Bitcoin will change the world for so many people, and I'm part of a generation, the boomer generation, that is the most selfish generation known to mankind, okay? We're soft, we are scared, we're pulling forward gains for ourselves at the expense of our children. We're just a bunch of really soft squid people. That's boomers. And we need younger people like Jack Dorsey, younger people like yourself, the young guns in the 25 to 35 age group that is going to make amends for the squid boomer generation, of which I am one, okay? We're soft. We've never fought a real war. We're scared of our own reflection. Everyone we talk to is a walking disease, bio tray or whatever you think. Like, we're just scared of our own shadows, and it's pathetic. So we got to get out of our own way and let the future take hold. So Jack Dorsey, in my opinion, a very smart guy who's developed some social media platforms, but what he's doing in Bitcoin is valuable for the ecosystem. You asked, okay, I'll finish the outlook without BTC last. Let's talk about El Salvador bonds and the IMF. Those two things are sort of linked, okay? First of all, the IMF is a fraudulent organization. It was unelected after the Second World War, and it was supposed to disappear after a few years, if I got my facts straight, and it never did. And now you have, tanning salon Lagarde there, looks like an old raisin. She's been in the sun too long, or sitting under the tanning booth. She's a dumbass, whatever. But she's involved with the IMF. They are just incredibly fraudulent and want to preserve the elitism at the expense of the world that lives much less privileged lives. The IMF are part of the problem with the legacy financial situation. Unelected bureaucrats that add zero value, and they're chalking down El Salvador, okay? They want El Salvador's experiment with Bitcoin to fail, and it's shameful because it's basically saying they want to maintain the poverty of the 4 million El Salvadorans that don't have a bank account. So one of the ways that President Bukele has decided to try and fight back against the IMF is issuing his own bond. It's a bond that is a fiat contract, okay? That's one thing. It has a 6.5% coupon, but it also has optionality to participate in the upside of Bitcoin price appreciation. And that's important because you can break the bond down into two different structures. You can break it down into a fiat contract, and then you can break it down into an option to participate on the accretion of the price of Bitcoin. as a hedge fund guy, I could slice and dice this instrument, and I could find ways of hedging it. I could extract the Bitcoin optionality, and I could sell Bitcoin call options against my ownership or participation in Bitcoin to hedge, so you sell the call option. It's essentially a covered call. Lots of crazy good things you can do with this thing. It's non-traditional in that it's not coming through a Wall Street investment house. And in that respect, there is some adoption risk. I hope that the underwriters, Bitfinex and Blockstream, have done their homework and tested the market as to how much money they think they can raise. I hope that they get their $1 billion. I'll tell you that either way, it's certainly a gutsy move by the president. And when I make investments in companies, one of the very important considerations is the quality of the management of the company, obviously, right? And I think that the quality of the management of the president in El Salvador is encouraging. He's trying to think outside the box. He's trying to extricate himself from the IMF extortion machine. The IMF is a parasite. And you know what? You got to call a spade a spade. It's a disgrace to free money and capitalism everywhere. And it's managed by bureaucrats that are trying to just ensure their own legacy. You got freedom versus slave. Okay. IMF is slave bureaucracy, and Bitcoin is freedom. Does it succeed in El Salvador? I sure hope it does. Regardless of whether this bond issue succeeds or not in El Salvador, it's caused a lot of people to think. And I think it's a great thing that people are thinking about this, because it's coming, okay? And it's coming in a big way. And it's going to be very good for the Bitcoin ecosystem as a whole. I think there'll be participation from some hedge funds. I think there'll be participation from high net worth retail investors. I'm not sure if any of the traditional bond funds in the world will take a piece of it, or a meaningful piece of it. But in hindsight, I mentioned this before, $1 billion used to be a lot of money. That's how much money the Royal Bank had lent to Mexico in the 1980s. Now $1 billion in the face of $1 trillion and multiple $100 trillion deficits. $1 billion, you sort of find that in the couch cushions of the local bank CEO, right? Like, I mean, he has it stashed in his in the cushions of his couch. So let's just say that I see promise in this. It doesn't come without risk. I hope it succeeds, and I believe that the underwriters will do a good job in facilitating the supply and demand for this type of contract.
Okay.
So that was that question, and then I have two more here. I guess I'll start with 2016. Yes, I found Bitcoin in 2016. I had retired from the hedge fund management business. We had just completed the best trade I thought ever possible in my career. We had made a lot of money for our clients. I was burnt out. We had bought a lot. We had bought hundreds of millions and billions of dollars of debt at 20 to 30 cents on the dollar in this structure that matured in Canada in under 5 years at 100 cents on the dollar. Okay, so we made 5 times our money in bonds. You don't do that in bonds. You never make 5 times your money in bonds, but we were able to, and we were able to do it by hedging out some very distinct USA corporate names, and I'll just leave it at that. But if people had actually done their math, they would have realized that buying protection, default protection on one single corporate name in the US could hedge billions and billions of dollars of this debt risk-free, or almost risk-free, and you could earn a 500% return. Man, it was shooting fish in a barrel, okay? And it was lovely to be alive, but it wasn't replicable in my opinion. So I retired, and then someone introduced me to Bitcoin in 2016. And my first thought was, like everyone's, it's a Ponzi. Yeah, I've heard about this Bitcoin thing. It's a Ponzi scheme. He said, no, listen to me, look, come on. and he showed me one thing that convinced me. He talked about, 21 million scarcity and all that, but then he showed me the blockchain in action on tradeblock.com.
I opened it today to check it. I haven't heard of this site
dude,
exactly before that.
It's so beautiful, okay? And I saw what's this? And you see a hash go across. $67, then you see $200,000, then you see $200, then you see $2 million, and these things are flashing across on your screen. It goes into the mempool.
The transactions exactly going in the mempool. Yeah.
And I'm just like, fuck, this is actually a live breathing system, and nobody owns it, and I can transfer this. I'm in. And I went down the Bitcoin rabbit hole in 2016, and I've continued to learn about it for the last 5 years. Okay. Now I want to mention this to people. Bitcoin is actually a better risk-adjusted investment today at $60,000 per Bitcoin than it was when I got involved in it at under $1,000.
Okay, just a second. Let me stop you right here. This is something that's so crucial, so important, and it's so hard for some people to get, because a lot of people say, I'm too late. I wish I bought it at $10. I wish I bought it at $100, at $1,000, and it's just so hard to get it. Can you please dive a bit more into this? What does it mean, risk-adjusted return, and how come it's better to buy Bitcoin today at 60,000 than it was 5 years ago at 1,000? Like, it doesn't make sense to a lot of people.
No, it does. Yes, it does. Okay, and you got to understand.
No, I get it. I get it, but I'm saying it's very hard.
Life is a probability distribution, right? And every investment you make, you start off with a probability assumption, and then as things move forward, that probability distribution can come to fruition, meaning, oh, I thought there was this percent chance that a positive outcome would happen, and things have gone south or pear-shaped, so the probability of my outcome succeeding is less. Or conversely, things have progressed and the probability of my outcome has increased. So that's all that's happened. I had the same price target for Bitcoin in 2016 as I do today. The difference is it's much more likely that it comes true today. And why? Very simply, what's happened between 2016 and today that ensures that Bitcoin will reach my price target? The response to COVID, okay? The idiot responses of governments printing money and giving it to every single citizen. That itself is not a bad thing. It's the amount that they did, and then the refusal to stop doing it, which ensures the debt spiral, which ensures that in 2016, there was still a chance the world could get their act together and pay down some of the debt they owed. But they didn't. And then 2019 hit, and now there's no solution. It is impossible. There's no reason for us to even pay taxes now, because any taxes we pay are just going to get sucked into the vortex of the debt spiral. Okay, but we're still going to pay. We're still going to pay taxes.
Greg, because I even named the whole podcast "The Debt Spiral" and Bitcoin with Greg Foss. What is the debt spiral? Let's go through that as well.
Well, I tried to mention it before. Your total global debt to your total global GDP
is 4 to 1.
4 to 1.
Yep.
What's the average coupon on that debt? This is all debt. This includes high yield bonds. It includes government. It includes provincial, state, municipal, all structured. I'm going to put a 3% coupon on that debt as average. And I think that's low, but stick with me. If it's 3%, it just means that your numerator is growing at 12%, right? 4 times 3 is 12%, which means global GDP, which is your tax base, needs to grow at 12%. Is it going to?
Nope.
Not even close. And you're going to say, well, inflation. Well, what happens to inflation is the coupon on your denominator expands as well. Okay? So it's impossible for your numerator, your denominator, to keep pace with your numerator when it's 4 times the size. That's called a spiral. And it just keeps expanding, and you can never attain escape velocity from that. In 2016, we had the chance. Now we don't have the chance. Very simple, grade 11 math. So how do you solve that debt spiral? You keep printing money because it's the error term. The printing of money is required to satisfy the debt balloon that's expanding faster than your tax base. So you have to print money to pay that incremental piece that is not being paid from your tax base. Not too difficult, right? It's error terms in mathematics. And that's what fiat money is. Fiat money is an error term that gets printed to close the debt spiral loop, because you have to come up with that money somewhere. It's a contract, and if they don't come up with the money, the contract is broken, and the company's default. Oh, sorry, the country's default. Bitcoin is insurance against the debt spiral, and it's 100% certain that the debt spiral will continue to expand. So Bitcoin is the most beautiful solution to the debt spiral. Does that make sense?
Yes.
Okay, so Bitcoin's better value today at 60,000 than it was when I bought it in 2016. Does that make sense?
To me, it does, meaning that back then you were taking, let's say, a risk factor of 10.
Correct.
And
Yes.
let's say you had X return, let's say also 10X return. And let's say today you have only a 5X return, but the risk factor is not 10, it's 2. So therefore, when you divide the one to the
Beautiful.
other, we
There
get
you
the risk to reward
said.
ratio
Yes.
that is
Yes.
just better today, which means that
Great
back then,
mathematics.
if I could put
Yeah, great
$1,000
mathematics. Yeah.
today I can put 5,000 and I take still the same risk just because the risk is lower, even
Different
with
way,
bigger
or,
capital.
Yeah, look, but still, it's asymmetric. Before it was asymmetric, now it's asymmetric with just less risk,
Yeah.
better probability of the outcome being attained.
Yeah.
Only math, very simple math, okay? So here's our last thing that we need to hit, and we're gonna be good.
Yeah.
Outlook without Bitcoin. I don't know. Bitcoiners are some of the most optimistic people I've ever met. So I'm not the only one that's an optimist, but I don't know where I would be without Bitcoin, because for 30 years I didn't have Bitcoin, and I felt myself going deeper and deeper and more upset with the way the financial system was working. Okay. I saw the corruption in the financial system firsthand, and there wasn't a solution. Now we have the solution. Okay. Is it 100% certain that Bitcoin succeeds? No, it's not 100% certain, but it's highly likely. And the best thing that could happen is that countries, free countries like the USA and Canada, embrace Bitcoin as the solution to the debt spiral. And if you embrace Bitcoin and you have natural resource energy to spare, like Canada does, which you could use to mine Bitcoin to increase the wealth of our citizenship, you are increasing the value of being a Canadian citizen. You don't have to worry about idiot politicians that say stuff like the budget will balance itself, okay? He can say whatever he wants, it will not matter, because that's fiat dollars versus your store of value savings account, which is Bitcoin. Let them say whatever they want with your checking account. Fiat money is your checking account. You need it so that you can buy your turkey, so you don't have to trade two cans of soup for, you know, or 25 cans of soup for a turkey, okay? Like, fiat money allows you to avoid barter, and that's what fiat is good for. It's a checking account, but don't save your money in your checking account. You're going to be debased such that you lose the value, your purchasing power. Save your money in Bitcoin. A parallel system where Bitcoin is embraced by the USA as a store of value will ensure that the USA will maintain its fiat currency reserve status, and Bitcoin will be the reserve asset of the world. It's going to happen. I say to my wife, and we're French speaking, Canada is French and English speaking. My wife is actually native tongue is French. I say to her, you know, we better learn Spanish. And she goes, why? And I say, because if El Salvador is successful and Canada doesn't do shit, we're going to be reporting to El Salvador before long, because El Salvador will flip in Canada. And that's an expression. They flip in the importance of Canada. It won't happen tomorrow. And hopefully we have some politicians like Pierre Poilievre, who continues to educate the population. Bitcoin is a beautiful solution to a man-made problem called fiat. Every single fiat fails over time. As Voltaire said in the 1600s, every fiat currency returns to the intrinsic value of the paper it is printed on. Zero. Don't try and rewrite history. Understand that Bitcoin solves a problem that man has been generating upon itself since the Roman Empire. since they started to take the gold out of gold coins and paying the Roman soldiers, right? This has been a problem since the beginning of time, and it always ends the same way. So we can embrace the solution, or we can put our heads in the sand and listen to the IMF, that is a criminal organization that will try and convince you that they should maintain their power in order to continue to get rich at the expense of the 8 billion people in the world, or the 6 billion people in the world that don't even have a bank account. Goodness, should be so simple. And it's going to be. And we're going to win this battle, and we're going to win this war. And I wish everybody a happy Thanksgiving on that note. I really, really had a great time talking with you. I hope I answered a lot of your questions. This, for the record, is the longest podcast I've ever been on. If anyone listens from start to finish, I'll tell people, thanks for listening. I really apologize. You had to listen to me for almost 2.5 hours. Man, I didn't want to ruin your Thanksgiving day. Go and watch some college football. Go and enjoy life. There is a solution. There is a very eloquent solution that, thank goodness, started in 2009. Because imagine if this was just starting now and we didn't have the solution. Well, luckily, it started in the last great financial crisis when the world was on the brink, okay? And the Fed did what they had to do, and the chancellor did what they had to do. But since then, they've just become greedy at the trough, the boomer generation. So try and enjoy your Thanksgiving day. Go and smack some boomer like myself. Go and give him a little fucking hit on the side of the head and say, smarten up, you lazy prick, okay? Do some work for the future. The kids, and the 3 kids that I have, and all the kids in the future that should not be being disadvantaged by us lazy, intellectually lazy Canadians and Americans. And on that note, I want to give a Thanksgiving shout out to Charlie Munger and Warren Buffett. Go fuck yourselves, okay? You lazy old pricks. Do some work on Bitcoin. If Bitcoin is rat poison, then fiat is the rat, okay? Disgraceful. You are being a disgrace to freedom of Americans and the kids of the future. Thank you, and God bless America, and happy Thanksgiving to all, okay? It's been a pleasure, Clement, and I probably have to dig a further, deeper bunker because I'm getting so much hate mail, but I just try and tell the truth, okay? Charlie Munger and Warren Buffett are conflicted because they own so many bank stocks that are going to be disintermediated by the Bitcoin standard.
Greg, firstly, it was truly an honor to have this podcast with you. Secondly, I want to say that I used to have 5 times a week. Now it's 3 times a week. I have a daily show, which is, I kid you not, 3 hours on average, meaning that sometimes it goes over, and still thousands of people are watching it. My audience at the moment is like 14,000 subscribers, but every single show that I stream is being watched on average by 3,000 people. So this is in a 6 million population, right? So if I was in US, where it's like 360 million, it was gonna be a lot larger. Anyway, my point is the following. They're used to long content. They like long content. They're here for the long content. They're not for the 144 characters in Twitter. They're here for the meaningful conversation. I absolutely, I started the podcast with how I'm in Bulgaria on one part of the globe. You're with 7-8 hours difference with us on the other side of the globe. I have one profession. You have completely other profession. And I started with disconnect, but I started with that on purpose. And here after the whole conversation, we see how many things connect us, and we have, like, you know, the same thoughts, the same issues at hand, and the same solution that we see at hand. And I'll finish by saying that a friend of mine who completely doesn't get Bitcoin, doesn't believe in Bitcoin, and since it hit $30,000, he was like, sell right now, you know. But when I was trying to explain one of the conversations, he had like a brilliant realization when I was talking about how Bitcoin is just like the way for me to protest, the way for me not to go and yell at central bankers or the president or whatever, just to put my energy, my money on the blockchain. And he said, so wait, is this like a technological revolution? And I said, yes, exactly. This is what it is. Like, it's unstoppable technological revolution that no one, even Trump, even the Bulgarian president, cannot stop. Thank you so much for the time.
I love it, and I hope to hear of your continued success. Okay, so I've never been to Bulgaria. I would love to. I need to go to Croatia for sure. My son is actually playing hockey in France right now, so I'm going to be closer to you. I don't think I'll make it over to Bulgaria, but it's on my to-do list. All right.
If you come to Europe, give me a DM.
All right, brother. I really appreciate meeting you, and happy Thanksgiving to everyone in Bulgaria. And I look forward to being part of your community. Okay. So thank you again, and love you guys from Canada. Good night.
Thank you. Good night, everyone. We are off camera.